What's going on YouTube? It's Day the CEO, and today I'm going to be doing a trade overview of all the trades that I ended up taking today with my profit and loss, how I ended up playing the trades, where I went right or wrong, and yeah, let's get right into it. So the first trade that I ended up taking was signaled by Malik. Now this trade is going to be Twitter to the downside. Now with Twitter, we obviously, if we go back to the 10-day chart, earnings blew downwards heavily. We'd seen a terrible earnings report for Twitter, sold off heavily, which we're also seeing today with Amazon and Apple. So really just earnings have not been the complete best. Even with great earnings like Google and Tesla, for example, we've seen flat movement. And then obviously if the earnings were good, then the next trading day we would see a massive run. So that's something to pay attention to. So just looking at the 1 minute chart on the actual entry point for Twitter, we ended up taking puts below this 54.6 level. I ended up holding to take profit around the 53.95/54 level. Now on this trade, I didn't enter it with too much equity, just about $1,400, and was able to make a quick $280 profit on this trade. So this trade was a very simple entry point, just playing to the downside. As you can see, buyers were trying to come in and getting rejected very hard. So we also had those reject levels up as well that Malik put, but they were going to be a bit higher, and we didn't end up pulling that high, so we just played the breakdown to the downside. The next trade that we're going to be going over is Tesla. So Tesla is actually a losing trade that I took. I haven't taken a loss like this in a while, so obviously it's just a mental thing. Losses are inevitable with trading, and you're always going to take a loss when trading. You can't stop yourself from losing at least once in a while. So what we see here is this 1080 level, which was our key level for a break to the upside that I was going to enter for calls. So as you can see, we tested this 1080 level and weren't able to break over it. This is also a psychological level. We ended up pulling down heavily, and then as you can see, if I zoom in a bit, we did push above the 1080 level, and this is entry point 1. So this entry point was obviously a terrible execution by me. I should have waited for a build out for Tesla to hold above the 1080 level and then have a further build out above, so that then we could take that for calls. And instead I ended up entering too soon and got caught in a false breakout. Now as you can see, the breaks of 1080 have been tested multiple times, and Tesla was unable to break throughout today. So test 1, test 2, test 3, and then broke out to the upside. So just right here, what I would say where I went wrong is not waiting for Tesla to build out. Now really, in the current market and the way Tesla has been moving, I should have known that it was either going to reject very hard or just continue to run. And something that I should have paid attention to is how pre-market was moving, and Tesla had already gapped up a lot. So that was obviously not the ideal trade that I would want to take, especially with Tesla being up so much pre-market. It wasn't really the type of trade that I would normally take, just because it looked a bit overextended. So what I would call this is just a bad execution, kind of chasing a trade. And what I should have done in this situation is wait for a build above 1080 and see if buyers were able to hold that level, instead of just getting right in at the break. So that was the loss on Tesla, which cost me about $1,800. So a 19% loss on Tesla. Next, what I'm going to be going over is the Google play that I ended up taking, and this is one of my biggest recent trades that I've taken. So let's just zoom in really quick on the 5-minute, switch over to the 1 minute. Okay, so something to pay attention with to Google, right? So we're going to zoom out here, and then what we really see is a flat earnings report. Now the earnings for Google were obviously great earnings. Now, the futures opened pretty flat. Google wasn't moving insanely to the upside or downside until the actual market opened. And that's something, a good tip that I want you guys to note down, is that whenever there's a great earnings for a certain company, you're going to want to watch the next day to the upside if it's flat aftermarket / pre-market, so that you can catch that move to the upside. Now, obviously I played a bounce, so this was the day prior we pushed to the upside, and then we just pushed to the upside very, very heavily. This was a huge move, and then this is my actual entry itself. So let me just pull back here to give you guys a better view. Bear with me. And I need to switch charts. So, okay. So here is how the Google trade played out, right? So we're paying attention to obviously this bounce level right here, okay? So this is the bounce level we're paying attention to. So we pull back down to this 2907, 2910 level. The original bounce level was going to be the 2900 / 2890 level. But buyers started to come in heavily around here. So what we see is this push to the downside. Now with this push to the downside, this is where I'm getting ready to enter the trade to push back to the upside for a bounce. Why am I looking to trade this for a bounce and a push back to the upside? Because of the relative strength in the buyers that came in due to earnings. Now this level right here, this certain level, was proven to show that buyers were holding up this level against sellers when sellers began to come in. So what that's showing me is that this could be used as a key bounce level. As we can see here, Google ended up pulling down very, very heavily. So 6:30 opening candle, pull down, tries to build back up, and then a heavy pull down right here with high volume. Now, whenever you see a significant move, whether it's to the upside or downside, remember that the stock always needs time to breathe or relax. So it's not just going to keep pushing down, pushing up. There always needs to be a breather unless there's some sort of specific news or just something catastrophic that happens. So right here was the entry point, as you can see. On this downwards candle, this is where we're entering the calls, not in this candle. This is where I took my position. Now, at this point, the calls are absolutely beaten up. The contract value of the calls are absolutely beaten up due to the IV of this sell-off. This is about a 25-point move from 29.35 straight down to 29.10. So the contracts are beaten up. This is where I'm taking my entry point. As soon as I enter, the next candle starts pushing to the upside. Now at this specific moment, I'm already up on the trade about 19% just in this simple candle because of how beaten up the call contracts were. Pushing back to the upside, especially with this volume straight up, with all these candles being green, is gonna do something to the IV or underlying factors of the contract. So we push back to the upside, holding here, looking to play back up to this mid range. Now I'm waiting for a hold above this candlestick to see if we can, obviously, like I wanted to do on the Tesla trade, build above this candle for further push to the upside. Now what we ended up doing is pushing to the upside about even with this candle. Now where we are is above this candle, so this is showing us that there's actual buyers coming in. Right here I'm still in the trade, up about 40%. Then Google starts moving sideways a bit, trying to figure out which direction it wants to push into next, and then Google broke above this moving average line, pushed to the upside, heavy volume off on this candle, and what I'm seeing is getting close to the original heavy sell-off candle. So as we near this candle, I'm looking to take profits. Ended up exiting the trade here, and this is where I was fully out of the trade, 100% out of the trade. Due to this candlestick being near, I didn't want to wait to see if we could play and hold again to the upside, back to maybe even above pre-market / opening candlestick, because that's very high risk, especially the way that the market was moving. So this is my entry point around 29.07, exit around 29.35. All the IV pushed down the call contract, so I was able to get a great fill price. Let me actually check my fill price for you guys so that you can get a better understanding of my actual P&L. Watch positions, orders filled. Okay, so ended up getting filled for contracts of Google at $18.50, so $18.50. Ended up selling the contracts for $29.30. So you guys can do the math on that. That's a 60% gain, which was about 10.8K on this trade. So this is one of my bigger trades in the books. Definitely went in with a bit more equity on this one, but I like the probability of it, playing it back to the upside. So I appreciate everybody watching this video. Make sure to drop a like, leave a comment below. November mentorship is coming up in a few days. Signups will be in about a day or two. I really hope you guys take advantage of this opportunity. It's going to be a lot of knowledge and not a lot of growth, and it's definitely going to be beneficial for you. If you're not the type of person that signs up or doesn't want to do mentorship, you're shy, I'm a nice person, I'm going to help you learn, etc., etc. If not, make sure you join the chat for my signals, and I can also help you out a bit in there as well. So I hope everyone has a great weekend and trading day tomorrow for Friday. Make sure you follow my Instagram down below at DayTheCEO, and peace. God bless.